Hello, everyone. This is Zak Gardezy. I'm the host of Money Minutes. I'm also a managing partner of Wealthstone Private Wealth Management. I'm a certified financial planner and a private wealth advisor. On Money Minutes, I cover the latest market headlines. I also share with you my outlook for what's ahead. And so the biggest news right now is, of course, the latest escalation in the Middle East.
Hello, everyone. I'm Lana Zak. We are following breaking news. The IDF says Iran has launched drones towards Israel. This is not unexpected. It's in retaliation for a strike in Syria this month that killed 7 Iranian military officers at the consulate there. Iran blames Israel for that strike. Israel has not taken responsibility for it. I also want to let you know that we are hearing from the Israeli military. They say that these drones will take several hours before they are actually there in Israeli airspace.
And so what does that mean for your investment portfolio? I'm getting a lot of questions from clients in terms of, should we do things differently? What's happened historically in these kinds of events? And what should we expect as this situation continues to unfold? And so I'll cover all of those topics. And so let's get right into it. So what could happen next? I mean, you've got this potential response by Israel that could happen this week. I was reading a report earlier today from the Israeli defense minister who talked about a response as soon as this coming weekend. And so as the world awaits what that response will be, you're going to have increased market volatility, I'm sure instability with interest rates, and then in addition to that, elevated oil prices. Now, one big risk that I see in this situation is the potential for the Strait of Hormuz to be shut down. As Iran has mentioned many times before, they are not afraid to try and shut that strait down. And if they do, just to give you some context, that small strait is extremely important to the world. I mean, you've got 1/3 of the world's liquefied natural gas that flows through that strait. In addition to that, you've got oil. 25% of the world's oil flows through there. And so if that were to get shut down, I mean, you're talking about inflation and economic issues that I don't think many countries are prepared to handle right now. And so serious implications for what could happen next. I think it's also really important to take a step back and understand what's happened historically, because this is, of course, not the first time there's been conflict in the Middle East. And looking at historical events can really help us understand what typically happens in these situations. Now, I'll add in here, we're in a really unique situation because of our ongoing battle with inflation. And so I'll touch on that in a moment. But historically speaking, there have been many events in the Middle East that have led to this kind of instability. And so I'll touch on some of those topics. To get right into it, I mean, you've got the Yom Kippur War in 1973. You've got the Iran-Iraq War in the 80s, the invasion of Kuwait in 1990. You've also got the U.S. invasion of Iraq, and then you've got the Arab Spring that happened in 2010 to 2012. In every single one of these instances, we've had increased market volatility. Interestingly, we actually had the opposite of what's happening to interest rates now. You had investors flocking to safer assets, which brought down interest rates and increased bond prices. And then you had, of course, the common theme throughout all of these scenarios is a significant increase in oil prices. And of course, in the case of, for example, the Yom Kippur War, this helped lead to a global recession. And so it really depends on the impact that this has on the oil supply. And again, that strait is extremely important. So very interested to see what happens as this situation unfolds. Of course, the entire world is asking for it to de-escalate, because this situation, as it continues to escalate, could lead to crippling impacts, not only from a humanitarian perspective, but also from an economic perspective too. I mean, what's happening with the 10-year Treasury? In situations like this, where you've got significant instability and a lot of risk, you typically see investors moving into safer assets like Treasury bonds. And when that happens, you see Treasury bond interest rates come down, and then you see their prices go up. Well, right now what we're seeing is actually Treasury interest rates going up, and of course bond prices going down as a result. And so that's odd, especially as you analyze some of these historical events in the Middle East. It's very different. And so my thought process here as to why that's happening is because investors are starting to realize, not only with some of this hot inflation data like today's retail sales numbers that were way hotter than expected, but also energy does play a major factor on inflation. And as we're seeing continued unrest in the Middle East, one can only imply That means elevated energy prices for the foreseeable future. And so as you start to factor that in, then you start to factor in, the Federal Reserve, who, sort of recently shifted from a potential 3 rate cut mindset to now the market's pricing in 2. It's very likely that if we continue to have these kinds of inflation numbers and the backdrop of these global conflicts, it's possible we don't get any interest rate cuts this year. And so that is why I believe the Treasury yields are going higher right now. And it's really starting to cause investors to recalibrate their portfolios, as many were expecting interest rates to start coming down this year. And so I'm often asked, what should you do in these types of situations, right? If you're watching the news, which probably not the best thing to do, but if you're watching mainstream news or even, some of the financial outlets out there, what you're hearing is all sorts of opinions, from anything from this is nothing, or nuclear war is about to break out and the entire world is going to end, so just move all your assets into gold or crypto. I think the most important thing that you should do is to not let those types of sensationalist headlines get to your head, because as I've mentioned earlier with some of the historical events, this really isn't the first time we've been through this type of escalation in the Middle East. It's also not the first time there has been war and conflict. So in every single one of those instances before, those types of conversations happened where people think, well, this is it, this is the end. And so the worst thing you can do in this kind of a situation is freak out, panic, sell, use emotion to determine your next move. And so think about the fact that, we've been through these situations before. I like to look at historical events. That gives me peace of mind, knowing that we've been through actually far worse. I mean, if we go back to really the origins of the S&P, which back then it was the Standard & Poor's 90, Great Depression, World Wars, multiple other wars, presidential assassination. I mean, we've been through some really tough times, and the market's overcome it. So this situation is something that I hope de-escalates, but we'll get through this as well. I'm actually looking at opportunities in the market to potentially buy some stocks that are coming out at good prices, and to even reposition portfolios. And what you should do is take the time now to either talk with your advisor about your portfolio risk or do the analysis yourself. Are you positioned far riskier than you should be? As we've had the market continue to increase leading up to this event, it's possible your portfolio might need to be rebalanced. You might be sitting on a much riskier portfolio than you intended on right now. And so this is a pretty early phase in the escalation, in my opinion. And before things get worse, I think it's important that you take a look at the risk levels in your portfolios and potentially get realigned with what your long-term strategy is. And so that really concludes this episode of Money Minutes. I hope you have a great rest of your week, and I look forward to seeing you all next week. Thank you very much.